You stand at the edge of possibility facing the vast ocean of financial markets. Each wave carries opportunity, each current holds risk. This is where fear meets discipline, where emotion confronts logic, and where most traders lose themselves before they ever find their path. I've walked this shoreline for years, watching as countless ambitious souls rush in only to retreat, defeated by the very psychology that drives the markets. The truth waits in plain sight, yet remains invisible to those blinded by dreams of instant wealth. Success in trading isn't about spectacular gains. It's about the mindset that allows small, consistent profits to compound into liberation. The millionaire trader isn't born in a single magnificent trade, but through thousands of disciplined decisions that honor the mathematics of growth. Consider the humble dollar. In isolation, it seems insignificant. Yet when compounded through consistent, patient action, it becomes the foundation of fortunes. This is the paradox that separates the successful from the desperate, the understanding that financial freedom comes not from gambling for wealth, but from nurturing it with methodical precision. The market doesn't reward your hopes or punish your fears. It simply reflects them back to you, amplified through your results. Your account balance isn't just a number. It's a mirror revealing the quality of your decisions, the strength of your rules, and your relationship with patience. The winning mindset begins where emotional impulse ends. It thrives in the space between greed and fear, where clarity emerges from the fog of market noise. This is where I found my path and where you must find yours. The journey ahead isn't about changing the market, it's about transforming yourself. The market reveals character before it reveals profit. Every decision you make under pressure, every trade you enter, exit, or avoid, carves the contours of your financial destiny. This is not philosophy, it is mathematics clothed in psychology. I've watched traders with brilliant analytical minds crumble under the weight of their own emotions, their charts perfect, their strategies sound, yet their accounts bleeding from self-inflicted wounds. The problem was never their knowledge, but their relationship with money itself. They chased validation, not value. They hungered for excitement, not excellence. The true pathway to wealth through trading begins with a fundamental recognition. The market doesn't care what you want. It doesn't know your dreams, your debts, or your desires. It simply presents opportunity within chaos, patterns within randomness. Your ability to extract consistent profit depends entirely on your capacity to separate emotion from execution. This separation is where most traders falter. Fear whispers to exit profitable positions too early. Greed urges holding losing trades too long. Hope replaces strategy when positions move against you. Pride prevents learning when mistakes demand. These emotions feel intensely personal, yet they are universal. The psychological tax that markets collect from the unprepared. The disciplined trader understands that consistency trumps intensity. A 3% monthly return, protected and compounded, transforms more lives than occasional spectacular gains surrounded by devastating losses. This is the mathematics of freedom that few grasp, the power of exponential growth through protected capital and consistent results. Consider the trading journal as confession booth and classroom combined. Each entry reveals not just what you did, but why you did it. Were you following your rules or following your feelings? Were you trading your plan or planning to recover from impulsive trades? The answers expose the gap between your intellectual understanding and your emotional discipline. I've seen traders transform when they finally understand that success requires psychological stability before strategic complexity. The simple strategy executed with iron discipline outperforms the sophisticated approach abandoned under pressure every time. This is not just theory, it is the lived reality of every millionaire who built their fortune trade by trade, day by day, following rules that protected them from themselves. The mindset of the successful trader isn't characterized by fearlessness, but by the appropriate relationship with fear. They feel it, acknowledge it, then act according to their rules regardless. They understand that confidence comes not from predicting market movement with certainty, but from knowing exactly how they'll respond to any movement that occurs. Your trading rules aren't just guidelines for entering and exiting positions. They are psychological infrastructure, bridges across the chasm of uncertainty that allow you to move forward when emotion would have you frozen or fleeing. Each rule should address not just market conditions, but your psychological vulnerabilities. The long-term vision of financial freedom through trading requires short-term acceptance of limitation. You cannot control the market, but you can control your position sizing. You cannot eliminate loss, but you can define its boundaries. You cannot predict outcomes, but you can ensure that no single outcome determines your survival. This is the paradox at the heart of trading psychology. The path to financial liberation begins with the acceptance of constraints. Your rules, your risk parameters, your daily habits, these are not restrictions on your potential, but the very foundation upon which sustainable success is built. The moment of transformation in a trader's journey arrives not with the largest profit, but with the deepest realization: the market will never change to accommodate your weaknesses. It is immovable, indifferent to your needs, deaf to your justifications. This truth hits like cold water, shocking at first, then clarifying. The market won't adapt to you. You must adapt to it, or you will be eliminated from the game with mathematical certainty. Let me speak plainly about money, not as an abstraction or a score on a digital board, but as crystallized freedom. Every dollar in your trading account represents potential, not just for wealth, but for the life that wealth enables. When you risk that capital without proper respect for what it represents, you aren't just gambling with numbers. You're gambling with time, with choice, with future freedom. The disciplined trader understands this viscerally, not intellectually. They feel the weight of each position because they recognize what it truly costs. The millionaire mindset in trading begins with this recognition. Most traders fail not because they lack information, but because they refuse to believe that psychology trumps analysis every time. The charts may suggest direction, but your mindset determines whether you capture that movement or sabotage your own efforts. Your emotional relationship with uncertainty dictates your capacity to follow your trading plan when fear screams for deviation. I've mentored traders who could predict market movements with uncanny accuracy yet couldn't profit consistently. Their analysis was sound, but their psychology was fractured. They knew what the market would likely do, but they didn't know what they would certainly do under pressure. This is the critical difference. The ability to predict yourself is infinitely more valuable than the ability to predict the market. The confidence that sustains profitable trading isn't built on consecutive winning trades. It's forged in the crucible of losses handled correctly. When you take a loss exactly as your plan dictated, no larger, no smaller, with no emotional aftermath, you strengthen the psychological muscle that will ultimately determine your success. Each loss absorbed according to predetermined rules becomes not a failure, but confirmation that your system works precisely as designed. This is how confidence becomes unshakable, not through avoidance of difficulty, but through appropriate response to it. Consider the trader who risks 1% of capital per trade. This isn't merely risk management, it's emotional management disguised as mathematics. At 1% risk, no single outcome can threaten your survival. No single mistake can derail your journey. This creates the psychological space to execute without the paralysis of existential fear. The math protects the mind, allowing decisions based on probability rather than panic. The compounding effect of this approach is both financial and psychological. Each month of consistent protected returns not only grows your capital but reinforces the behaviors that produce those returns. Your confidence compounds alongside your money. Your discipline strengthens with each rule followed. Your patience deepens with each plan executed precisely as written. This is how small returns transform into life-changing wealth. Not through dramatic acceleration, but through relentless consistency protected from self-sabotage. Examine the psychology of greed that derails so many promising traders. It isn't simply wanting more, it's wanting more right now at the expense of having far more later. The trader seduced by greed increases position size after wins. Feeling invincible rather than fortunate, they hold losing positions too long, unable to accept the psychological cost of admitting error. They abandon proven strategies during drawdowns, seeking the excitement of new approaches rather than the discomfort of necessary adjustment. The disciplined alternative isn't the absence of ambition, it's the channeling of ambition through systems that harness emotion rather than suppress it. The disciplined trader wants wealth just as intensely, but understands that consistent small steps create exponential long-term results. They feel the pull of greed but redirect it toward process rather than outcome. Their rules transform emotional energy into methodical execution. Now consider fear, the shadow companion of every trader who has faced the abyss of significant drawdown. Fear isn't your enemy. Unacknowledged, unmanaged fear is what destroys accounts. The skilled trader doesn't eliminate fear, they integrate it as valuable information. Fear questioning your position size may be wisdom speaking. Fear suggesting you haven't fully researched a setup may be intuition worth heeding. But fear urging abandonment of your trading plan in the middle of properly managed trades is the voice of amateur psychology that must be recognized, then overruled through predetermined decision frameworks. Your trading rules aren't theoretical guidelines, they are emotional circuit breakers designed to prevent psychological electricity from burning down the house you're building. Each rule should address a specific emotional vulnerability. If you tend to exit winners too soon, your rules must define precise exit criteria that require no real-time decision. If you habitually ignore stop losses, your broker should enforce them automatically. Your rules must be stronger than your momentary emotional state, or they aren't rules at all, they're merely suggestions you'll discard under pressure. The results you see in your account aren't random. They are the precise mathematical expression of your psychology made manifest through your decisions. If your account shows wild swings, massive gains followed by devastating losses, it reveals a mindset that prioritizes excitement over consistency. If your equity curve shows steady growth punctuated by controlled drawdowns, it reveals psychological infrastructure built for long-term success. Your account balance is the ultimate feedback mechanism, speaking truth when everyone else, including your own mind, might offer comfortable lies. Consistency, the most unsexy word in trading, yet the foundation of every fortune built in the markets. The trader who makes 3% 10 months in a row with 2 break-even months will transform their financial reality more dramatically than the trader who makes 50% 1 month and gives it all back the next. Consistency isn't just about returns, it's about identity. When your trading becomes as reliable as your breathing, neither excessively celebrated nor excessively feared, you've developed the mindset that allows compound growth to work its mathematical magic. The patience required isn't passive waiting, it's active restraint, the disciplined refusal to act until conditions align with your predetermined criteria. This patience must extend beyond individual trades to encompass your entire trading journey. The market pays for patience in direct proportion to its scarcity. While others lunge at mediocre setups, you wait for optimal conditions. While they overtrade from boredom, you find comfort in selective engagement. While they change strategies with each loss, you trust your long-term edge enough to weather statistical variance. Every millionaire trader I've known understood one thing above all: the ultimate edge isn't found in technical indicators or fundamental analysis. It's found in the capacity to do what others cannot, to follow rules when emotion demands deviation, to maintain discipline when circumstances suggest exception, to trust process over outcome when results temporarily disappoint. This psychological edge compounds every bit as powerfully as interest on capital. The journey to trading mastery is simultaneously about building wealth and dismantling the emotional patterns that would prevent you from keeping it. You must construct a psychological architecture that supports consistent execution while systematically eliminating the decision points where emotion typically overwhelms logic. This isn't about becoming emotionless, it's about channeling emotion into appropriate domains while protecting your execution from its influence. The mindset that compounds small profits into financial freedom isn't complex, but it is rare. It requires the humility to accept that markets cannot be controlled, only responded to appropriately. It demands the courage to face losses without narrative or excuses. It necessitates the wisdom to understand that sustainable success comes not from spectacular individual trades, but from thousands of small, correct decisions strung together like pearls, each one insignificant alone, yet magnificent in aggregate. Your trading plan is more than a collection of entry and exit criteria. It is a psychological contract with yourself, a promise to honor mathematics over emotion, process over outcome, consistency over intensity. When you execute that plan with discipline, day after day, month after month, you aren't just accumulating money. You're accumulating evidence that reinforces your identity as someone who does what must be done regardless of temporary discomfort. This is how financial freedom becomes inevitable rather than aspirational, through the consistent application of rules that protect capital, manage risk, and allow the miracle of compound growth to work uninterrupted by psychological interference. The path you walk as a trader is ancient, though the markets themselves may be modern. This is the timeless journey of human psychology confronting uncertainty. The screens change, the assets evolve, the fundamentals transform, but the internal battle remains constant across centuries. I return now to where we began, that shoreline where possibility meets risk. The successful trader doesn't conquer the ocean. They learn to sail it with respect, with preparation, with the humility to understand its power and the discipline to navigate its patterns. The financial freedom you seek through trading isn't found in the perfect strategy or the flawless entry. It emerges from the space between those technical elements, from the quality of your decisions under pressure, from the consistency of your execution across changing conditions, from your capacity to protect what you've earned while patiently building upon it. Consider the dollar not as currency but as a seed. Each small profit properly protected and reinvested contains within it the same potential as any seed to grow into something that sustains life, that creates shade, that bears fruit beyond what could be imagined when it was first planted. The millionaire mindset in trading is that of the patient gardener, not the impatient gold miner. The gardener understands that growth follows natural laws that cannot be rushed but can be relied upon. Your trading psychology will be tested most severely not in the losing periods, but in the winning streaks. Success creates the illusion of invulnerability. It whispers to abandon the very discipline that created it. This is where you must remain most vigilant, when everything seems effortless, when the market appears to bend to your will, when confidence threatens to become hubris. The rules that protect you from fear must also protect you from overconfidence. There is profound peace in trading with a compounding mindset. The desperation of needing specific outcomes fades. The urgency of time disappears. When you understand that consistent small steps inevitably lead to massive distances covered, you release yourself from the emotional turmoil that plagues the impatient trader. This isn't just psychological comfort, it's strategic advantage. The calm mind sees opportunities invisible to those blinded by emotion. The greatest obstacle between you and the long-term results you seek isn't the market, it isn't your strategy, it isn't your capital, it's the natural human tendency to prioritize short-term emotional relief over delayed gratification. Every time you take a loss larger than your rules permit, you choose immediate emotional comfort over long-term financial freedom. Every time you exit a winner prematurely from fear, you make the same choice. The disciplined trader understands this trade-off and chooses differently, accepting temporary discomfort for lasting reward. Your trading journal, reviewed with ruthless honesty, will reveal whether you're on the path to compounded growth or trapped in the cycle of hope and disappointment that defines the amateur. The patterns will emerge with clarity when you're ready to see them. Are you following your rules consistently? Are your position sizes appropriate for your capital? Does your equity curve show the stability that enables true compounding? I've witnessed the transformation in traders who finally grasp that spectacular returns aren't the goal. Consistency protected by discipline creates the mathematical inevitability of wealth. This shift isn't merely technical, it's existential. The trader becomes the investor in their own process, trusting the compounding effect of correct decisions made thousands of times. The mindset that transforms small profits into financial freedom isn't found in a moment of inspiration. It's built day by day, trade by trade, decision by decision. It grows as your account grows, strengthened by each challenge overcome according to plan rather than impulse. Begin now, not with the perfect strategy, but with perfect respect for the power of consistency. Not with dreams of overnight wealth, but with commitment to the process that creates lasting abundance. Not with fear of what might be lost, but with appreciation for what can be built through patience and discipline. The ocean of opportunity remains. The journey is yours to navigate. The compass of rules, the map of strategy, the anchor of risk management, these tools await your disciplined hand. The rest is simply time and mathematics, working their quiet magic on capital protected by the rarest of human qualities, the patience to allow compounding its full expression.